This video is going to be really good. It's going to be going over one of the most important things in the market, and that is higher time frame. We're specifically going to be talking about today higher time frame candle closes and how to pair those with intraday market maker models, how to confirm these candle closes, because we're not just going to, uh, use these closes in key or random levels. We're going to use them at key levels. So yeah, let's just go ahead and get into the couple of variants that I like to use. This is all, I got this from the MMXM trader, T-Trades, and ICT. All credit goes to them. But let's get into it. So let's start over to the left over here. So this is when we hit a key level and we form a swing point in the market, right? Just a 3 candle formation, and candle number 3 closes over candle number 2, right? So this next day, we expect price to open, low, high, close to continue that distribution, right? The smart money reversal being candle number 2, candle number 3 and 4 will continue high, right? You can read this too, right? We expect candle 4 to expand, right? So any continuation, when price is like this, it's just expanding. There's no draw on liquidity to really take. This is really all we have to go off of, right? It's just these previous day's high sweep, previous day's high sweep. That's really all we have. And I'm going to be showing you guys how to actually confirm this, right? How to confirm these days, because in my opinion, these are my least favorite days because there's no real draw on liquidity to target, but I'm going to show you some examples and stuff on how to use these. And then the next day model, sorry, this is just when we manipulate the candle 1 into a key level, and we expect candle 3 and 4 to expand. Now, this can look many different ways, right? This can be, still bearish like this, right? But ideally, we close bullish with a long wick. Okay, that's what you want to see. And we want price to respect the lower half of this wick or the constant encroachment. I forgot to go over that. So when prices close over the previous candles, we mark out the whole candle, right? And we want the PD rays in the upper half of this candle to be respected. So we want to see SMTs in here. There's going to be fair value gaps, like on the 1 hour and the 4 hour in this upper quadrant of this candle, as well as this one, right? Because we close over the previous day's high. So we want price to create the wick inside of the upper half of this candle's range, as well as this one, because again, we close bullish. We're not going to mark out the wick because we don't expect price to go down there, right? We're going to mark out the whole candle. Right? But when there's a long wick, we use the wick, right? Because it doesn't make sense to use the whole candle because look, we close at the 50%. It doesn't really make sense, right? So we use the wick, right? Wicks are gaps, right? So we look for our MMXM, right, in the lower half of this wick as well. And then candle 3, we expect to expand. So this is the ideal. It's these two that we really want to frame our trades off of because the smart money reversal is already put in, right? So manipulation occurs, right? We take out the previous candle's low. This is viewed as manipulation. So what happens after manipulation? If you watch my video on, or anything, if you know IPTA cycles, right? Manipulation, we expect expansion to follow. And you will see a lot of times that candle 3 and candle 4 will expand towards the draw liquidity. And then this one is just going to be a longer wick into a fair value or a fair value gap PD, right? It doesn't really matter. And it can close like this. It doesn't matter, right? It can close under the previous day's low. Doesn't matter. But we're looking for price to reject off of this wick. And this one actually happens quite a bit, right? And this one is, I like this one as well. It's when we take out a candle's low. This could be a fair value gap too. I could show some examples of that. I don't know why this is fucked up, but whatever. We'll sweep the previous day's low and close over the previous day's high, right? So this is kind of like a high resistance liquidity run. And let's go over some couple of things that we like to see because price is not always going to look like this, right? This is just some things that I want you guys to keep in mind. So whenever we have A swing point doesn't matter. A swing point, um, even a candle 2 right here, like right. Seconds up. Let me just draw this real quick for y'all. Let's make this actually, what do we call it? Green. Sorry, let me just make this real quick. All right, so what we want to see inside of this wick is SMT. So it can look many different ways, right? We want to see SMT on the lower time frames inside this wick. You want to see the CSDs inside this wick, like hours CSDs. If this is a weekly chart, maybe a 4-hour CSD. But on the lower time frames, there's going to be SMTs inside of here. And when this day opens, right, we want to see a daily profile align. So we're going to open right here, right? We want to see Asia consolidate. London low today, hitting a key level, a fair value gap. I mean, this can look so many different ways, guys. Maybe classic buy day, right? So this would confirm that expansion. So now we're hitting a key level. We have the daily closer on our side, and now we have a daily profile on our side, right? And now we're just in line with everything. So this is A plus trading, right? And then we take price higher. And it can even look like this, right? I'm going to show you guys an example today. Let's say we don't even close strong. We just form a swing point. Oops. Okay, let me make this fatter. It's going to make me mad. Let's say we fail to close over this candle's high, right? What we want to see in this candle is SMT again, right? We want to see SMT somewhere inside of here, right? Does this wick create SMT? And this can still be a strong reversal. So again, we're just using SMT, and the next day we'll be looking for the same thing, right? And I'm going to show you some beautiful examples. So let's get into it. Let's get into the charts real quick. So first, right, so let's go into the examples. All right, so here we are on the daily time frame, and we hit a key level, and this is that wick with the, or this is that candle with a long wick that hits a PDA, right? There's also some SMT right here. I just didn't mark it because it's like with this previous day low or something. And again, what are we looking for this next day to do? Right, to respect the lower half or the upper half of this wick, right? And we want to see price reject from this area. And look at this area, or look at this candle too, right? We want to see price reject, right? And then notice this candle, like I said, sweeps the previous day's low, the previous day's high. What do? Right, expand the next day. So let's get into the intermediate term time frame. Let's see what that looks like. All right, so what do we have on the lower time frame? Look at the candle wicks, the previous candle's wicks with SMT there. So now this becomes protected, right? And we have a displacement, a CSD, and a fair value gap. So what does New York come into? Right? It opens, consolidates, expands lower, manipulation, and then we expand away. And look at the fractal nature of the market, right? We have the constant encroachment up here, and now let's go look into the lower time frames. But first, right, New York reversal, right? Consolidation. There's no opposing run. We don't hit a key level or anything. We do jack shit, right? Uh, and then 9:30 manipulation, so time and price. If 9:30 manipulates, what will 10 a.m. do? The new 4-hour candle. It'll open, low, high, close. So let's go into the lower time frame. All right, so we hit that key level. As I said, 9:30, hit this key level, right? What do we have again? SMT, confirming smart money reversal, displacement away. So what is this first break, right? This is the low risk buy. And then once we trade away from this area, whatever PD array gets created is now the first stage, right? If you guys watch my video on this, it's the same thing every single time. It's actually insane. Whatever PD array is created off of this first stage, again, is the second stage. So you can get in on the order block, or if we retrace back, that's still the second stage, right? And yeah, you see stages of accumulation here, original consolidation. It's as simple as that, right? We're combining the daily closure, the 1 hour uh, MMXM, the intraday, sorry, and the daily profile, right? We're combining all these things. So I've already taught you. Um, have I taught you all intraday market maker, intraday profiles? I don't know if I did, bro. Honestly, don't remember. If I didn't, I'm gonna have to make that video. All right. So what does this day close like, right? We create a failure swing, right? So let's look here, right? What does a strong swing low um, consist of, right? Hits a key level, check. Long rejection, check. SMT confirming smart reversal, yep. SMT at the lows. Candle 3 closure over previous day's high, check. And then we disrespected PD array, so what is this candle likely to do? Open low, right? And accumulate, and then distribute high, right? So let's go look at the intermediate term perspective here. All right, what do we have? We have one candle, and we have a consolidation. And then we manipulate this swing point, right? Manipulate the low of that range and form SMT into a fair value gap. So this is my SMT model 3, 6 a.m. manipulation into key level. So this is 6 a.m. candle. Again, long wick, so it's fractal. What do? Respect the lower half of this wick. Um, right? Because what is the logic behind there, right? If we already manipulated, why do we need to see a retracement, right? Long wick manipulation, distribute, right? You're going to distribute. Look, long wick, distribute, right? Manipulation has already occurred. Orders have been picked up. It's time to distribute price higher. That's the logic there. So 6 a.m., right? Manipulation. We take out a swing point, and then 10 a.m. distribution. So I'm getting in on the open, low, high, close to the previous high. All right, so we hit this key level at 7:30. So again, 8:30, 9:30, we don't have to manipulate because manipulation has already occurred. All right, so this is all IPTA, okay? So we take out the range low, right? And we target the range high. So order pairing ranges, as you see here, New York reversal. We invert this fair value gap. We're starting to break up, right? Um, this is a low risk buy. So once we leave this area, right, what do we create? A fair value gap. And then we have the uh, old fair value gaps, drag that out in time. They create strong reaccumulation areas for price. And then we get a order block formed off of these two PD arrays alignment. And then you can interrupt that. First stage, second stage, you can interrupt here. A little bit too high for me, but yeah, I mean, right? Open, low, high, close. Simple as that, right? Let's go on to the next one. All right, so what do we create, right? A swing point, and the fourth day we close over. So we're expecting continuation. That's all we can expect, right? So let's go to the lower time frame and see what that looks like. All right, so we have Asia session down here. So this is actually SMT right here. I didn't mark it because it's just kind of ugly on my chart, but we raid this low, right? And we create that daily wick. So the opening of the candle is, maybe you don't create the daily wick, sorry. The daily wick is right here, I believe, sorry. But we do hit a key level at 9:30, and we distribute, right? 10 a.m. opens here, so manipulation already occurred, right? And then this is the hourly time frame, so it's just an internal to external with my SMT model 1, right? So we have SMT confirming it, we're rejecting lows, and we're CSDing. So again, this is what you want to see for these continuation candles, confirming them, right? Because it's a little risky longing this, right? Because what happens after expansion? Anything can happen, right? Expansion, consolidation, right? Expansion, consolidation. So you got to confirm it. So let's go in the lower time frames. Sorry. All right, so we hit that key level. This is a 5-minute chart, right? We have a CSD, right? Again, we have that fair value gap that was respected previously. Drag that out in time, and then you have PD array alignment now. So this is a high probable low risk buy, and then the order blocks that get created off the lower SPY, first stage distribution. You have the breaker or a mitigation block, whatever you want to call it, right? Drag this fair value gap in time. I didn't mark it because it's ugly. It's too much stuff on my chart. Drag that out in time, and look where we respect, right? And now this becomes the second stage distribution. So I got in on the first stage distribution. And if you guys want me to make a backtesting video, let me know. I already did actually, but I'll make a better one, and I'll try to mark up all this stuff. I don't even mark this stuff up on a backtest. I literally do it for my journal and to share with you guys because I just kind of see it. But um, again, we targeting this external, but how do we know that's going to continue? Well, intraday and SMTs, right? Intraday profiles. So again, right? Oh yeah, so this is what I marked out. This is what I remember. So this is the daily open. We have no significant run. We have no significant daily wick, right? This is the daily wick, but you don't want to see that, right? This stack of lows. So 9:30, we manipulate this low with SMT. So into a 4-hour, these lows are a 4-hour fair value gap, but I just drew this 1 hour fair value gap. So manipulation plus SMT under daily open. This creates the daily wick. So now uh, we can kind of match this wick almost. This manipulation, we can match that in distribution. And then key level hit, 9:30 manipulation, 10 a.m. distribution. It's the same thing every time. If I didn't make a video on this, I'm going to make a video on this. And then SMT confirms. So let's go here. Right, so at 9:30, right, with the original consolidation of the accumulation phases here. And then we inverse this fair value gap, right? We have a breaker, smart money reversal, SMT here, so it's the SMT model 1, low risk buy off the fair value gap, and the first stage distribution right here off this order block that gets created off the fair value gap. And then you have the propulsion block here, created off the breaker, and then yeah, you can just really all these get respected, right? Because it's bullish order flow, and down close candles respecting bullish order flow. So 10 a.m. open, low, high close. So those are these examples that I was going to show you guys. Now I want to show you guys some oil examples, and then we'll wrap it up. Quick video, very informative. So let's go on the weekly chart. So beginning of the week, we ran out the previous week's low. And what do we see here? So we see 1, 2, 3, 4, 4 bullish candles in a row. And after 3, generally, you see a change in the order flow. We're going to pull back or something. So 1, 2, 3, 4, we pull back. But a lot of times it's like 3 is the max. I mean, sometimes, you know, we can, of course, run and run and run. But after 3, it's like, okay, you know, we kind of want to see maybe something else. Kind of we got to be cautious, you know. Anyways, we have this SMT that Monday forms, okay? And then we have this long wick. So again, that's one of the candle closes that we like to see. And we have a fair value gap here. So Monday, you're going to see, let's go, or sorry, Tuesday. The daily profile, it does support it, like Asia highs, but look how we're displacing, right? We're displacing and respecting these fair value gaps. So it doesn't really follow through here. Possibly you catch something here, right, off this expansion maybe after it hits like this order block or some shit. But I mean, nothing too clean, right? It doesn't really reverse, but notice how we close. Right, we respect the constant encroachment. And now to validate this, right now we form a swing point, by the way. And remember, to form a swing point, what do we want to see, right? We want to see change of state deliveries. We want to see SMTs. And that's what we get here. So actually create the SMT on candle 4 right here. And then, right, if this is manipulation, right, Asia can be low today. It's just like Monday can be a higher low of the week if we manipulate on Friday or manipulate on Monday. So, right, so we displace chain of state delivery here, have a fair value gap you can get in London. And we could target the previous day's session, right? And then drag out these fair value gaps, guys. Move that mountain time, right? Whoops. And then, you know, we have PD ray alignment now, internal, yeah, it's external. And let's look at that daily closure, right? Strong closure, right? And what do? We actually close over the weekly open, right? This is significant, right? This actually confirms low of the week. And again, we can match this manipulation. So draw out this. We can usually match this, right? Draw out this, right? It's going to match that manipulation likely. And or go more, right? But yeah, what was I at? Oh yeah, so what we want to see is a daily profile support this, right? We want to see price, uh, you know, respect this upper half. So let's go look at the hourly time frame. So what do we have? We have a London. This is absolutely perfectly, absolutely textbook. London low of the day, right? Rejecting a low inside of that key level. High probability order block because it's uh, created off of a fair value gap, right? So, right, we have Asia highs, absolutely perfect, right? We have the chain of state delivery here, absolutely gorgeous, absolutely gorgeous. All right, the next day, how do we close? Bullish. How do we close bullish? So again, what do you want to see? Let's go look. We have the new week opening gap, and again, London low of the day, and then we retrace hard, right? And then again, SMTs, right? Same thing. We respect this, and then we distribute after the SMTs. So it's really the same thing, just over and over. I can make a video, a lot of videos about maybe how to frame market maker models. Eventually, I'm gonna put it all together. If I didn't go over daily profiles yet, honestly, I have no idea if I did. I will do that. But yeah, let me know what you guys think, and yeah, I'll catch y'all later.